Welcome back on the Pursuit of Wealth, Tilray traders and investors. It's Rod with Pow Group, your home for MJ stocks, crypto assets, news, and interviews. Today is Monday. Happy Monday, July 28th. Hope you're doing well. Hope you had a great weekend. Today is Tilray earnings day. We're going to be reviewing their Q4 2025, and it was also the full fiscal 2025 as well. They did miss in terms of revenue and EPS, and was seeing a lot of misinformation with regards to the earnings per share or EPS. So we'll clear that up, but it was a big miss on both fronts. And stock was down. It was about 65 cents after hours. Before we get to it, make sure to smash the like. If you're new, you can subscribe, tick the bell, all that good stuff. You'll be notified on any future videos or when I go live. And as always, this is not financial advice. This is for entertainment purposes only. And full disclosure, I do own Tilray. It's my largest cannabis holding. You can follow us over on X as well, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So this was the Q4 2025 earnings call. We live streamed it. There was a lot of information in this call. It's over an hour and a half. So there was I think close to one point, there was close to 400 people live on the live stream. And that's not counting all the people on the actual call. And then there's going to be a ton of people watching this on replay. The video's already got close to 2,000 views. Just goes to show you how much attention this company is drawing, right? And it's not because there's no value here, right? People look at the price. The stock market is, especially the cannabis sector, it's full of people who know the price of everything but the value of nothing. And if you peel back the onion here, there's a lot under Tilray, right? There's a lot going on. And yes, while everybody would love to see reform in the US happen quicker and have it happen yesterday, the fact of the matter is the longer that this goes on, in my opinion, the stronger that the thesis becomes with these Canadian LPs. And they talked about international sales, how that's a big focus for them right now. And they're seeing tons of growth there. So we'll go over that in just a moment. But this was the analyst estimates, and I got a consensus. I posted this video about a few days ago. I said the analyst estimate for revenue was 237.5 million USD and negative 0.02. So it had a big miss. It came in on both fronts, a huge miss, and we had an impairment. That's something that I mentioned as well on the channel for a while now. When we were discussing this in the Pow Group private community, I think months ago at this point. So essentially, they have, from all the mergers and acquisitions, you think of Hexo and all the InBev acquisitions as well, they had a lot of goodwill on their books. So we've been seeing these impairments, which is another reason why we had a huge miss in terms of EPS. So that was there was an impairment this quarter, and they wanted to get that out of the way. And we mentioned that this could very well be the case going forward. And again, the company isn't profitable yet. They still have debt. They said they reduced their debt by about 100 million. But again, if a company still has debt and they're not profitable, we need to expect more dilution potentially. I'm not saying they didn't say anything about more dilution. They didn't mention anything about the reverse split either. They have until September 21st. So they could get a 6 months extension from there. That brings us to March 20th, 2026. So, I think with rescheduling potentially happening in the US come fall, there's a potential that we see Tilray regain compliance organically. So we'll just have to continue to monitor it. Even at the end of the day, if it does do a reverse split, it's not the end of the world, folks. Just understand that. Tilray isn't going anywhere. If you look at, like I said, look under the hood with this getting it's growing leaps and bounds. They have so many assets, so many brands, it's not even funny. So my daughter's crying in the background. I think she's getting ready for bed and doesn't want to have any of it. So hopefully she's not too distracting. But we'll go through some of the highlights here. I want to remind everybody as well, they discussed excise tax as well on the call. Normally I go through and I highlight all of the main points, but it was such a long call, and I had an extremely busy day today. I was over at my Airbnb, and I run two of them, and they were going through a completely new fob system change, security system, so that took up most of my day. Yeah, you can go through some of the live chat. We had a great discussion on this as well, and there was a lot of nuggets in there that you can see. But I want to remind everybody as well that they discussed excise tax, or they remain hopeful, although they're not depending on it for their business. Look at this. From the 3 months, you can see here, it was about 31% of total revenue on their cannabis revenue. So 21.399 million. So 31% of their revenue is going towards excise tax in Canada. And they continue to explain the process regarding one national stamp that looks to be in the works. So that's going to cut down on cost, time, money, etc. Overall, just removing those burdens, right? And we're going to continue to see the illicit market just dwindle. But yeah, they really honed in on international sales. Germany and Italy, really all over the place. They were discussing like Australia, New Zealand. They said they had revenue from 21 different countries. What other cannabis company do you know received revenue from 21 different countries this in the last year? Right, like that's insane. And they're growing. Like I said, they're getting rid of a lot of SKU rationalization, so getting rid of a lot of SKUs that aren't driving high margin. But we'll go through some of the highlights here in terms of, I won't go through the whole thing. Like really, like I said, if you just look at how many views or how many eyeballs are on this earnings, and they didn't release earnings right until 4:30 Eastern time, which was right when the call was starting. So a lot of people were getting eager. But yeah, they talk about international growth here, increased by 19%, with Q4 increasing 71% when excluding Australia. European cannabis revenue grew 112%. So again, folks, this is the highlight of everything, right? It's high margin, and there's no excise tax, that insane amount of excise tax that they're paying, right? So you can peel back the onion here and understand, like they had talked about the drinks as well. I think they said 1,300 distribution points now, and they have, Total Wine and all that. Like they're already selling hemp beverages in the US, folks. And they have the distribution channels, especially with all these acquisitions from InBev. And we're going to see this thing absolutely ignite, folks. We're going to see the rest of Canada. They said, they talked about on the call how they have a ton of new products that are going to be coming soon, very innovative. So it's exciting to see. But we'll go through some of the highlights here. So they had mixed results. They definitely missed in terms of EPS and then their revenue. So we'll go down to the quarter. So net revenue for the quarter was 224.5, so big miss. We were expecting 237.5. In terms of EPS, you can just scroll down here. Some people were saying it was like a huge beat. And if you scroll down here, just look for the 3 months ended May 31st. It's right here. It says net loss per share, negative $1.30, right? And you can even compare it with the last quarter of last year, and then just make sure that whatever data you're looking at, that matches up. And you can see here, it does. And negative 130, or you can just scroll up. There's even a blurb here right under the quarter highlights right here. It says net loss 1.267 billion for the fourth quarter. And then if you scroll down a little bit more here, net income loss per share was $1.30 compared to negative 4 cents in the prior quarter. So there you go. You have everything mentioned there. Adjusted net income, though, was $20.2 million in the fourth quarter, and adjusted net income per share was 0.02 compared to 0.04 in the prior year quarter. So maybe that's what people were looking at, and they were confusing that. But no, they definitely had a huge miss in terms of EPS. You can look here, estimate negative 0.02 came in at negative 1.30. And then same thing, 232, it came in at 224. So big miss. Stock was down, like I said, at 65 cents last time I checked. Yeah, we're still floating right there at 65 cents. No major red flags here on the chart. Unless we lose 57 cents, then no major red flags whatsoever. And it is a daily bull flag, still targeting $1.04. But like I said, 57 cents must hold. Overall, like I said, no major chart damage at the moment. We'll see how it behaves during regular trading hours tomorrow. Broader market was a little rocky, but we'll go through some other notes here. So strong balance sheet, $256 million available in cash, marketable securities, and total debt repayments of $100 million to date. And they mentioned as well that they're going to be looking at strategic acquisitions and basically just investments. We know that they're talking about AI, utilization of AI and crypto. But one thing they did mention is that they might look, especially with reform on the horizon in the U.S., they might look to acquire a player in the U.S. That they said that that's something that could be in the cards as well. So very overall, promising trajectory that they're on. But again, the company still has debt, right? They're not profitable yet. So we need to just, I saw people in the live stream saying, they're going to come out with a surprise profitability, like free cash flow, is one thing, but you're not going to see positive EPS for a while. And maybe 2026, but I think it's going to be closer to 2027. But like I said, I think 2026, 2027 will be the turnaround year for a lot of these companies where they really, go into the black. But, we just have to be patient. So go through some of my notes here. So the fiscal year net revenue, 4%, was $821.3 million, or 6% on a constant currency, despite strategic reductions impacting revenue by $35 million. Q4 revenue dipped 2%. Gross profit, 8% for the year. Let me just go through some of my notes here. So it posted massive net loss, like I said. Already went over that. And largely from the non-cash impairment charges of $1.397 billion and $2.096 billion respectively. So one for the quarter, one for the year. Adjusted EBITDA declined 6% in Q4. Oh yeah, and they did say that the guidance for 2026, they said, I think it was 62 to 72 million for EBITDA. Adjusted EBITDA declined, though, 6% in Q4 to 27.6 million and 9% for the year to 55 million. Segment highlights include 19% international cannabis revenue, like I said, 71% in Q4, 19% beverage alcohol growth amid SKU rationalization, 5% distribution growth, and 9% wellness growth. And that's something too, folks, right? They have so many acquisitions, that beer and beverage brands and, Hexo and Redecan. So it takes a while to get all of these rationalized, and I think they're on a good trajectory. And like I said, working on new innovative products as well. Already went over the cash position, and they continue to diversify, like I said, in international markets and beverages in 21 countries, folks. All right, so some of the key points here from the positive side, the revenue growth. They had net revenue increased 4% overall, 19% growth in beverage alcohol, driven by craft acquisitions, 19% in international cannabis, positioning Tilray as a leader in diversified segments. What else did we have? Yeah, they talked about Italy being a big market as well. Obviously, they're getting first new cultivars and first to market there. Their gross margin improved 700 basis points, and that was to 40% for the year, reflecting operational efficiencies. Wellness margin rose to 32%, so love to see that. Like I said, their cash reserves are decent. But yeah, they did have revenue declining for Q4 revenue. And like I said, those impairments. But like I said, overall, we're looking pretty good. They talked about decisions like vape and wholesale reduced MJ revenue by 15 million annually, and Project 420 SKU cuts in beverages cost 20 million, potentially slowing short-term momentum. So yeah, that's pretty much all my notes. Like I said, this is super lengthy here. It would take us hours just to go through all of this and dissect everything. And most people probably have already read this. But like I said, even if, we have a great, I just don't understand why people are putting so much, basically waiting behind these individual earnings reports, because until the sector sees a sector-wide catalyst, right, we need something like rescheduling, and not just promises, hopes, and dreams. Right? We need something actually concrete happening, whether it be safer banking getting signed into law, and uplisting to the NYSE and the NASDAQ. That's another one, and then actually happen. Not we're thinking it might happen. It actually happened, and then same thing with rescheduling. Not progress on rescheduling. It actually happening. Right. Once we get in my opinion, one of those three things, that's what I think is going to lift us out of this rut that we're in. And it doesn't matter if we have a fantastic earnings report. It's going to be given back, right? It'll just fade it away, just like Aurora. It had amazing earnings. Let's just bring that up real quick. So ACB, and if there's anything I missed too on the call, let me know in the comment section of this video. But let's just go back to ACB here. It wasn't that quarter. It was the couple quarters ago. Yeah, look at the surprise that they had. Surprise beat in terms of revenue and EPS. Absolutely crushed earnings. And the stock was up about 100%. And then look, it gave the whole move back. We basically gave the entire move back. So we were at 342, and then we crashed all the way back to 375. So again, if the whole sector's still bearish, it's going to be bearish as well. So, we might see a short pop. Tilray does have a high short interest. It's about 20%. So it's ripe for a short squeeze. But keep in mind, we were just at 35 cents and hit 83 cents. So in a very short period of time, just in a few weeks, we're up 136%, right? So at this point, again, I'm not putting much weight behind until we see a sector-wide catalyst and these names start, jumping up hundreds of percent. I'm not going to be putting very much waiting behind an individual earnings report, especially, like a name like Tilray, for example, which again, we shouldn't be expecting profitability anytime soon. They still had a ton of goodwill. They still had a lot of these mergers and acquisitions that they were sorting out, and they still have debt, right? So it's going to be a little while. Like I said, more than likely going to be a 2026, maybe even a 2027 thing. While some LPs are starting to become profitable, Tilray is probably next in line out of the tier ones. Whereas like a CGC, it would be lucky to do it by 2027, right? It might be a 2028 thing. So can it be growth? But overall, I think, it was a great, the growth trajectory that we're on is showing a lot of promise. But let me know your thoughts and opinions in the comment section below. I think we're going to end it there. Like I said, there's companies that are in the US that have great earnings, stellar earnings. Think of Green Thumb. They're profitable. And it's just not resulting in higher share prices, right? Because the whole sector trades in tandem, right? Not down to the day, the second, the minute. But overall, everything is still extremely bearish. So we have to call a spade a spade. And like I said, I've said many times right on the channel that we need to, dilution is a real thing, right? Until they have no more debt and then until they turn profitable, we have to come to terms with the fact that dilution could still be in the cards. So again, it's not the end of the world as long as you're not diluting and not if you're not growing, right? Your revenue isn't growing. You're not seeing the growth that we've been seeing internationally and in certain segments. That would be a red flag if they're diluting just to keep the lights on. But if they're diluting for kind of mergers and acquisitions and growth initiatives, then I think it's I think the days are numbered for. I don't want to scare everybody, right? I don't think there's going to be that much more dilution, especially as they look to turn it into profitable status. But like I said, it's going to be a little while yet. We just need to dial down the brakes. Wouldn't even matter if they had amazing results until the whole sector reverses. Everything's going to just trade in lockstep, right? So we have to come to terms with that. I know a lot of people that are invested in Tilray, they don't really, pretty much most people are just all in on Tilray, right? So they're not seeing the sector correlation. You need to see that because it doesn't matter, right? There's tons of companies that are in the US that are profitable, that the license, it doesn't matter if you're a producer, not a producer, profitable, unprofitable. It's all been decimated across the board, right? 80 to 90% pullbacks. So we need a sector-wide catalyst. I don't think we're gonna have to wait that much longer. But let me know your thoughts and opinions on this in the comment section below. Like I said, there was a lot mentioned on the call. There was a lot mentioned in the earnings report. Had a very busy day, so I didn't do as much note-taking as I normally would. But let me know if I missed anything, and we'll continue the conversation in the comment section below. It's Rod with Power Group. Thanks again for joining us on the Pursuit of Wealth, and we'll see you on the next one.